how institutions accumulate stock and driving the price, and how do they liquidate big positions in a model book stock. The time frame we're looking here is a 12 to 21 period of time for a model book stock to make a big move. On the left side, we have price levels. Black line represents the price of the stock. The dotted red line is the 50-day moving average. Series of yellow bases on the run-up. So let's assume that if a growth mutual fund wants to own 750,000 shares of the stock at a price under $50 per share. This stock could be worth over $200 per share. So how are they going to build a position and then eventually liquidate that large position? Now, within the first base, stage one base, the institution will start to accumulate 100,000 shares towards their 750,000 share target. The stock breaks out, but then it pulls back down to the pivot and creating a short-term shakeout. The institution will use that shakeout to accumulate another 100,000 shares. As the stock starts to recover and move up and truly break out, part of that move is driven by this institution buying another 100,000 shares, and we'll see an analyst downgrade. The downgrade creates some pricing pressure on the stock, and the stock pulls in all the way down to the 50-day moving average, creating a base. This institution uses its buying power to accumulate another 200,000 shares. The stock actually breaks out, but then it comes back down to the pivot at the double bottom base, and the institution uses that shakeout again to accumulate another 100,000 shares. Stock actually moves up, breaks out for good, and the institution and other institutions are now recognizing this stock is in an uptrend. Our fund here is accumulating another 50,000 shares. So the stock actually almost doubles and starts to consolidate in a choppy range. In that range, you'll frequently see shakeouts. The mutual fund accumulates another 50,000 shares, and they do it twice on two shakeouts within the base. So at this point in the move, this institution has accumulated 750,000 shares, and they've done it at an average cost of $45 per share, better than their target of $50 per share. So they have their position, and their research says the stock could go much further.
Watch part 2 by clicking on the link below. Join RainKingInsights.com for more educational content and trade ideas.